we're going to look at Novo Nordisk and we're going to compare it to Eli Lilly. They're both they're both the biggest players in the weight loss drug market right now. Novo Nordisk was the first and was the highest valued company in the entirety of Europe. Eli Lilly is currently outpacing Novo Nordisk, and they're outselling them in the US. One of the big differences between the two as well, Novo Nordisk uses medication that you have to inject. Eli Lilly uses a pill form. From a patient perspective, that's just a lot nicer, as you can imagine. Novo Nordisk is developing the pill version as well, and they have more being researched as well. Now, those are the products, but we're going to look at the two. We're going to look at the two businesses from a business and from a stock perspective and see which one is the one you should own, if any at all, and how can you compare the two. We do this by using our software, marketdaddy.ai. We have validated data that we buy from a third party. We can make sure that the data is accurate. We have our own algorithm to determine whether this is a great business, whether something can be bought at a great price, whether you can reliably predict it for the future or not. And you can use this yourself as well. You can try it out for free over at marketdaddy.ai. If you don't like it, you can cancel anytime, no questions asked. If you do, you can stay around, pay a small subscription fee, and you can use it for as many stocks as you like and and do your own analysis to put your money to work and make sure your financial future is secure. Now, if we look at Novo Nordisk, let's look at our AI analysis. It's a great business. It's not a great price. If you look at their valuations, it's quite highly valued, but it can be reliably predicted for the future. So already looking good. Now let's take a quick look at their graphs. Revenue growth is through the roof. Free cash flow growth through the roof. Return on invested capital through the roof. Cash to debt. Okay, that's declining a little bit, but still relatively solid. And shares outstanding, they're buying back shares. Great, this is what we want to see. Now, if we value it and see what they can do, they've last grown for almost 25%. Huge. Let's say they can continue that for the next 20 years, but a little bit lower. Normal case, let's say they grow about 15%. And worst case, they can only do 10%. Eli Lilly is beating them, but they can still grow a little bit because the entire market is growing for weight loss drugs. Now, exit multiple, I'd be willing to pay more for a 20% revenue growth. Normal case, I'd be willing to pay market average. And worst case, let's do below market average. And I'm aiming for a 15% return. Whether or not the company is doing good or bad, I want to get paid first. Now, we run our valuation. You can see that it's actually slightly undervalued. We calculate it's worth about 450 based on our own assumptions, and the current stock price is only 388. That means you have an upside of about 15.7% based on our assumptions. Now, never trust something because some guy on the internet tells you it's a great buy. Do your own due diligence. You can gain access to our software, use your own inputs, and get your own valuation. But currently we can see this is what Novo Nordisk is worth. Now, if we compare this to Eli Lilly, they're also a drug manufacturer. They're also very active in the weight loss industry. Let's see what our AI analysis has to say about this. It's not a great business. Can't be bought at a great price. Hugely overvalued. A price to free cash flow is almost 1,700. That's massively overvalued. Also a PE of 65. Barely any returns, barely any dividends, and it's very hard to reliably predict for the future. Now, if we try to value it, if we look at their return, let's say they can beat that, and the normal at 15 and then 10. This was the same as Novo Nordisk, but let's say we can do this. Now, I would be willing to overpay for 20% growth, but I'm not willing to pay 65 times their earnings. I would be willing to pay 25, 20, no, market average, 15 and 10, and I want 15% return. And it's massively overpriced. So everybody is talking about how Novo Nordisk is losing the weight loss race to Eli Lilly. But if we just look at the valuation and if we predict what the company is going to do, even if Eli Lilly grows massively, you're not getting any return. and this is the risk of investing in a good story. You can pay way too much for a great story, and that can hurt you in the long run. Now, Novo Nordisk is from our valuation perspective, if you look at this, is the better business to own. And from a valuation perspective, it's a better entry point. Eli Lilly is currently valued at 750, but worth only 212. So you're overpaying about more than 70%. So that's how they pair up. And then we haven't even talked about all the drugs they're developing. Now, if you're interested in any one of these companies, be sure to do your own due diligence and do a deep dive and see whether or not this is the right fit for you and whether or not you want to buy into it. But if we compare them very strictly, Novo Nordisk comes out on top. It is the better business, you can buy it for a better price, and you can more reliably predict it for the future.